What's up everyone? Welcome back to my YouTube channel and to this continuation of the insurance series. In today's video, we're going to talk about the DP3 special form policy. This policy is geared towards you landlords. So if you're thinking about buying an investment property, stay tuned and I'm getting right into the video. So DP3 policy is also same as the HO3 policy, divided into two sections, Section 1 and Section 2. Section 1 covers A, B, C, and D. Let's get into A. A covers the dwelling amount for which the property is going to be insured. So how much insurance the actual property is going to need is going to be determined by a replacement cost estimator, which is basically a calculation that the insurance will do, and it will tell them how much insurance the actual structure needs. It's important that you communicate to your agent that you want replacement cost value and not actual cash value, because replacement cost value is going to ensure that they're going to pay you to rebuild the home. And in addition to that, most of these policies include additional coverages which ensure that you're not going to get paid depreciation, okay? And when you have a mortgage on that property, the bank is going to require that you insure for replacement cost value. So coverage A is your dwelling coverage. So let's talk about coverage B. Coverage B is other structures, and the same as in an HO3 policy, this covers anything that is detached from the main dwelling. So if you have a detached pool or a detached in-law quarters, let's say you bought a house that is a single family home and then it has an in-law quarter, you're renting both. In that case, this would apply. Or if you have a fence or if you have a little fountain, that's where other structures will come along. And the same thing as in an HO3 policy, you can negotiate that up and down. Usually comes at a 2% of whatever your dwelling coverage is, and you can go up to a 20%. And in many cases, you can even eliminate it altogether if you don't have any other structures. Coverage C. Coverage C is personal property. Again, this policy mirrors a lot of the HO3, but in coverage C is significantly lower. The standard policy is going to come with only about $6,000 in coverage. Why? Because your policy, the DP3 policy, is your policy, not the tenant's policy. So those $6,000 more than likely will cover for the appliances, which are really the only personal property in the house that belong to you, the landlord. And the last coverage of Section 1 is your loss of use, or in some policies it's spelled out as fair rental value. And that is in the event that, for instance, the house catches on fire, your tenants have to leave, and now you're not making any money because you can't rent the property. Well, it's going to cover for that loss of rent that you're going to encounter due to the loss. And very important to look in the policy jacket, because it's not always going to be dollar for dollar, but it does go a long way. So that coverage is particularly important to make sure that you have it, that it's properly covered based on the rent that you're going to be charging in that unit. Guys, if you've enjoyed this video, please make sure you hit that like button, that you subscribe to my channel, and share if you found this information useful. Next week, we'll be talking about Section 2 of a DP3 policy, which is going to cover your liability policies. And remember, if you know of anyone in the Dade County and Broward County, South Florida area that's looking to buy or sell, I am a real estate agent and I will be more than glad to assist you. See you in the next video.